Congratulations, you are thinking about selling your house. In this video, I'm going to break down the tax implications of selling a house. Whenever you are selling an asset of any type, you have to consider whether or not the sale of that asset is going to be subject to capital gains tax, which can be up to 20%, so a good chunk of money. For example, if you are a single filer on your tax return and you make between $40,000 and $440,000 in a single year, you will have a capital gains tax rate of 15%. That 15% will apply to any asset that you sell that you have held onto for longer than 1 year. If you haven't held onto it for longer than 1 year, then your tax rate on the sell or the gain of selling that asset will revert to your individual tax rate. So if you are in a 20% tax bracket, then you would be taxed at 20%. Obviously, taxes, when most people think of it, are not fun, right? Most people are trying to avoid as much tax as possible. And I am all for that. So I'm a CPA and I love to minimize my tax liability as much as legally possible. And I've always said this, there is two ways to make more money. You can either increase your revenue or you can decrease your expenses. So minimizing taxes can have a huge impact. For example, if you sold an asset and you had a gain of $50,000 and you were getting taxed at 15%, that is $7,500 in taxes. What's up, everybody? My name is Greg Acton. Welcome to my channel. I am a CPA with the goal of changing the world, making it a better place by helping people with their personal finances. So if you have not done it yet, please consider subscribing. Share this with your friends. I have a goal of 100,000 subscribers by the end of July 2021. So help me out in changing the world one person at a time. Anyways, it is very easy to see that you could lose a significant portion of the gain on a sale of an asset just to taxes. The good thing is there is some pretty awesome loopholes within the tax law to allow you to avoid taxes completely when you sell a house. So there are a few rules when you are selling a residence or a house that you can put into place to make sure that you do not pay taxes. The first rule is kind of like a time rule, meaning you have to have that house that you are selling be your primary residency for at least 2 of the last 5 years. The second rule is an ownership rule, so that means you have had to own the house for at least 24 months. So that means you can't rent a house for a year, buy the house, live in it for a year, and then go try and sell it and take advantage of this rule, because that means you haven't owned it for 2 years, even though you've lived in it for 2 years. And then the third rule on this is the IRS does not want you to take it on multiple houses within a certain time frame, so they make sure that you haven't taken this exemption, man, thrown in an accent for some reason. The IRS doesn't want you to take this exemption multiple times within a certain time frame, so you can't take this exemption within the last 2 years. You can only take it every 2 years. You might be wondering how you could take the exemption multiple times, and it would mostly be for people who own multiple houses. So say you owned a house, you lived in it for 2 years, you owned it for 2 years, and then you started renting it out and you moved to a new house, you owned it for 2 years, you lived in it for 2 years, and then you wanted to sell both houses. Well, you can't take the capital gains exception on both houses. You can only take it on one unless the sale of those houses is spread out by more than 2 years. So if you meet these 3 rules, the time rule, the ownership rule, and the past exemptions rule, then you can sell your house and all of the profits that you will get from it are tax-free. Boom, big savings. Big savings, tax savings, avoiding taxes, all of that leads to you smashing the like button on this video. But be warned, there is a limit on how much you can claim exemption to, but that limit is extremely high, so that is a good thing. If you are a single tax filer and you have a gain of more than $250,000 on the sale of your house, anything above that $250,000 gain will be subject to capital gains tax. And if you are filing your taxes jointly with your spouse, then that limit doubles. So for example, for me to be taxed on a house that I've passed all of those tests that I've mentioned earlier, I would have to have a gain greater than $500,000. So for the large majority of us, those limits are sufficient to handle any gain that we have, and most likely any gain that we have would be completely tax-free given that we've passed the 3 tests. All right, what if you don't pass all 3 tests? What if you bought a home, you lived in it for 23 months, so just shy of 2 years, you owned it for 23 months, you don't pass this thing, sad day, taxes. This is exactly what happened to me and my wife. So we bought a house and we lived in it for 23 months, 1 month shy of 2 years. And you may be thinking, well, why don't you just hold on to it for another month, stay there, and then move? We didn't have that luxury because we needed to move, and I was moving for work. I had to completely sell the house, move so I could start a new job. So the only way I could do it is by having this house for 23 months, 1 month shy of having big tax savings.
You were so close.
Needless to say, I was bummed out. But then I did a little more research, and it turns out there is a loophole to the loophole in the tax law. And for some reason, the tax law loves to do that. They love to make exemptions to exemptions to exemptions. So that way, there's all these tricky, weird ways of saving on taxes, which is good for the taxpayer. But don't kid yourself, the IRS loves to get their tax revenue, so sometimes those exemptions do not play in our favor. But this particular one does. So I am going to run you through my exact home sale, and we are going to show you how I was able to do it with a gain at absolutely no taxes. So my wife and I initially bought our first house for $270,000. 23 months later, 1 month shy of that 2-year mark, we sold the same house for $329,000. So we had a $59,000 gain. So in this example, if I had to have paid capital gains tax at 15%, then my tax would be $8,850, which is a huge chunk of change, one that I was super bummed out that I was going to have to pay in taxes. But just like I mentioned before, I moved, and I moved for work. So there's a cool little rule. If you move an additional 50 miles away from your current workplace to go to a new job, you get to claim exemption on the profits of your house, which I did. I ended up moving 250 miles away from where I had previously been working for a new job. So I was able to claim exemption. However, there is a limit. So just like I said before, there is a limit on the exemption amount that you can claim for capital gains tax. For a single person, that is $250,000. And for a married person, that is $500,000. Now, I lived in my house for 23 months. So the IRS says if you are moving for work, I can take 23/24. So I take that little portion, apply that to my limit of 500,000, and that is the new limit that I would have. So do all the math, it is going to be a pretty high number. I'm assuming it's going to be above $450,000. I'll put it up there once I actually do the math on this thing, and then that's my new limit. Like I said before though, those limits are pretty dang high, so for me, it completely covered my gain, and I was actually able to sell my house completely tax-free. Boom, tax savings, love it, smash the like button. So, for example, if you stayed in your house for just 1 year instead of 2 years, that means you get to take up to half of the max of that exemption. So if you are single, then that means you could have a gain of up to $125,000 tax-free, and if you are married, filing jointly, then that means you get to have a gain of up to $250,000 completely tax-free if you are moving an additional 50 miles away from your current work. There are a few other exemptions or a few other ways that you can get out of paying taxes on the sale of your home. Another one is if you have to move for medical reasons. So if you moved because you had to go somewhere else for medical attention, then you can claim an exemption. I'm assuming it's very similar to moving for work. You get to claim an exemption and you won't be taxed on the gain of the sale of your house. So there it is. There is the quick and dirty explanation of how you can sell your house without having to pay capital gains tax and avoid all of that tax. A pro tip, if you fall into that situation that I explained before where you have two houses and one of them was a rental and you lived in it for 2 years, then you moved and you lived in another house for 2 years, then you can only take the exemption on one house. So if you're going to sell both houses within a year, obviously pick the house that has the biggest gain to claim that exemption. And that's a simple election on your tax return. So if you sell two houses, you want one to not claim the exemption, and then you want another to claim the exemption. That way you get the biggest tax savings. So pick the one with the biggest gain, claim the exemption on that one. Thanks for watching. If you have not done it yet, please subscribe. It'll help me hit my goal of 100,000 subscribers by July, the end of July in 2021.